Hello friends and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Motherson Sumi. Is it headed to multi-year highs or will it correct from here? So let's understand about the stock. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Motherson Sumi, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time for detailed market or company talk. You can directly email me and we can work things out. Now about the company, it is a leading auto components manufacturing company here in India and it boasts of marquee clients. Motherson Sumi was trading at around 80 rupees around or you can say it was trading at around 16-17 rupees some 10-11 years back and has surged to now 200 to 20 rupees. So it has already done a 10-15x from those levels. Clients include Volkswagen, Mercedes, Ford, etc. They have businesses here in India as well as abroad in all parts of the world, and probably that was the reason why the stock did not perform that well earlier. The stock really struggled, and it was because of the European operations not doing that well. And with the shutdown that took place last year, things were not really great for at least 1.5 quarters. Dividend payout ratio is pretty good, and the company boasts of very strong management which works in tandem with the employees to create shareholders wealth. If you look at the numbers, and these are Q3 numbers for FY21 versus FY20, so these are the December numbers. Market cap is around 50,000 to 55,000 crores. Sales went up by around 8.5%, and what was pretty good was the profit surge. The profit surged by 3.5 times to around 800 crores. There's high promoter and institutional holding with 9% free float, and the surge in profit took place because of you can say lower expenses, and they've cut down on cost, they've cut down on a number of costs, and operationally the company did really well. And although sales were more or less in single digit, profits remained very robust. And even if we take out the extraordinaries, profit has gone up by 2.5 times, 2.2 2.3 times from last year, and that's why the stock started to on that day started to fall a little bit earlier, but then on the same day it surged by the end of the trading session, and from 170 odd levels, 170 172, the stock went to 230 in no time, in a week or two. And then it has been consolidating between 215 220. It is because of such numbers that they have produced at the moment. Margins have been shrinking, but this time around margins have come out very good. But bottom is look like has been made, so looks like that the worst is behind us. It looks like that what we saw probably year and a half back, we saw in March of 2020 the stock trading at around 60 rupees, which was at abysmal levels, I would say. We won't see that levels again, and probably in the next 3-4 years we won't see that. So as expected and as I have explained, the auto cycle has revived to a greater extent. Yes, there is a little bit of slowdown in sales for the February month, for the January month, but I believe that in 3-4 months time, when there will be vaccination, when things will open up probably in the second half of 2021, we will see the demand resume, and this time around Diwali should be extremely good compared to what we had in 2020 and in 2019. So I believe that things are back on track for the auto sector after 2-3 years of lull, and that is what normally happens in this sector. That you normally have 7 years of 6-7 years of very good run and 2-3 years of you can say a bear market, and that is why it's called a cyclical sector. We have passed those 3 years of bad market, and I believe most of the auto stocks, they have moved up a lot. So on major corrections can be bought into, and Motherson Sumi in auto ancillary is one of the top picks. I must state here that I'm invested in the stock. I have a trading position in the stock, so take that into account as well. If you look at the performance, so stock was down 27% this year till budget. So just before budget, the stock was down still year on year, but has recovered sharply from those 52-week lows, especially after what has happened with the results, with numbers showing sharp recovery in performance. And I believe very confidently that the worst is over. Yes, we could have one quarter which is which could go below expectation, but yet profits will be up. So the stock may consolidate, may not go up that much initially or in the next 2 3 months, but over the next you can say 6 to 8 months we will see higher levels. That's my understanding. Strong management and a market leader in this space. So we are talking of the largest auto ancillary play. And then when we talk about electric vehicles, this is also trying its best to get into EV space, and you can say bring up capacities for electric vehicles. And I won't be surprised if in a year or couple of years of time they will have a lot of products manufactured for the electric vehicles as well. Return ratios are strong and getting stronger with the results that we have seen. Why was there an auto slowdown? So auto industry went through a lot of stress during 2018 till the pandemic, and once the pandemic was over, the demand slowly came back. And one needs to understand that investors look at optically the numbers. So look at numbers optically. So we look at 2019, we compare it to 2020, it wasn't that great. But when the numbers would come in for the June quarter and the September quarters for FY22, they will look extremely good compared to FY21 numbers. And I think that would also trigger a move on the stock, and the things it looks like would get even better in FY23, because by the end of this year 2021, hopefully everybody will be vaccinated here in India. So we will see a surge in sales and profitability going forward, as well as people will uh, go ahead and have more jobs. Things will open up completely and people will be able to buy more bikes and cars. So economic slowdown fear escalated globally, and that's why the stock fell. European countries getting hit deeply with the pandemic, and we have seen that it really got triggered and began big time in Europe and Italy, etc. And that's where the most business is. Motherson Sumi, and that's where it got hurt badly from March onwards in 2020, and we saw how it nosedived, the stock nosedived. So that was a major reason. Projection of further stress in the next 2 years came about, and so the stock fell even further. That people were looking at FY22 numbers with a sense of, you can say, uh, really doubt, and so they thought that even FY22 the numbers will not recover, which has happened, and that's why the stock fell first very badly on the downside, and now has recovered very sharply, because FY22 numbers are uh, pretty good, are extremely strong, it looks like. So sector has went through a phase in which it was totally out of favor, and people were looking at stocks which were more related to defensives like IT, pharma, etc., or healthcare, especially because of what has taken place last year. So people were looking at healthcare stocks rather than looking at autos and, you can say, growth related stocks. The investments in growth related stocks has just returned in the last few you can say months. So investors were more or less looking for defensive plays, and especially because of the pandemic, people were looking at pharmaceuticals, and we saw what happened between April and June. The way pharmaceuticals surged, double, tripled. Some of them went up 4 5x. Healthcare stocks, we had diagnostic companies, smaller diagnostic companies, doubling, tripling, 4 5x. and all, and nobody was looking at growth oriented stocks. Everybody was thinking that everything was murdered, as I may say. So everything, so like something like Maruti went to 4400, and then we saw what happened. So Maruti went to 7800 from there. So things were totally out of favor. Stocks which were related to infrastructure, real estate, anything to growth, autos, auto ancillary, etc. So the sector completely went out of favor. So what do I say about the stock? So hold if you have it. If you have bought it at 170, 180, 200, you hold. Buy incrementally. See, the decline may happen, and I'm very surprised to say that see that the stock is very strong in a very difficult market. With the market has already fallen something like 900 points. Nifty fall has taken place in 2 3 sessions, but the stock has gone down by around what say 11 12% to from 230 to 215. It has gone down by, sorry, only 6 7%. So I won't be surprised if 200 comes about. 200 is a strong support. Cycle is turning around. If it goes to 180, that is a huge buying opportunity. I think 180 190 will be strong, very strong supports, and 257 is the level to look at. 257 is its all-time high. If that gets taken out, then we are looking at a much bigger rally all the way to 450 480 even in the next couple of years. But initially we are looking at 330 on the stock if 257 260 is taken out on a closing basis. So I'm looking for that. I'm looking at that, and probably we'll have consolidation for 8 10 trading session. We'll have a decline, but I think levels of 200 would be good to get at. Sale of CV as well as passenger vehicles are increasing. Yes, we will see some dips here and there, but I think 2022 will be a huge year. I'm expecting will be a huge year for the auto sector, and probably in next 6 months we will see up and down movement, but 20 by 2022 end we will see the stock much higher than where we are. So probably a good 2 year investment bet this can be. Remember that it is a 4 5 year play, 3 to 6 year play, and yes, I don't want you to invest into it for more than 4 to 5 years, because the cycle is normally 6 years and 3 years like that. So invest for the next 3 to 4 years. Let's see how the performance remain. On each decline you can go ahead and buy the stock. Avoid trading into it, as we have seen. So if somebody would have sold at 220 222, he didn't get the opportunity to buy below 200 at the moment. Now, I don't know, probably next week the stock may fall, but with the kind of ferocious fall that the market has seen, we expected Motherson Sumi to go below 200, and that has not happened. That shows the kind of strength that the stock is showing. And put 10%, no more than 10% into stocks like Motherson Sumi. So this was my video on Motherson Sumi. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.